Hello, my name is Robert McDonald, co-founder of Lucky Dragon. Today I'm going to take you through how to properly backtest your Lucky Dragon robot using MetaQuotes data and also tick data. Alright, so now I have MetaTrader 4 opened up. I'm looking at the navigator. I can see that Lucky Dragon's been successfully installed. I actually have Lucky Dragon mounted and running currently. First thing I'm going to do is just go ahead and take away my terminal and open up the strategy tester. And I'm going to want to make sure that I have Expert Advisor and Lucky Dragon selected, Great British Pound Canadian Dollar, every tick, and Use Data also selected too. And you're going to want to pick the current date, and you can go back as far as 2008 with MetaQuotes data. You want to make sure that you're using the period of 1 hour and a spread of, we're going to start with 2.5 pips. So the first thing we want to do is actually go and get the data. And before you do anything, you're going to want to go to charts and go ahead, and you're going to see a different number here, but go ahead and just put 9s. And the reason why we're doing this is because MetaQuotes will clip the data if you download and don't do this step. And so I'm going to fill this up with 9, so when I press OK and I go back to the charts, you'll see this number right here for max bars in history and max bars in charts. And this is correct. This is how it should look. So from here, I'm going to go to Tools and go to the History Center. And what you're going to see, if you click on, let's say, a random currency pair, and you double click 1 minute, you're going to see 0 records, and then it'll show up with about 2,000 records. Now, with the Great British Pound Canadian Dollar, we're going to want to grab the 1 minute data, and it's going to, if you haven't downloaded data before, it's going to say database about 2,000 in records, and then you're going to click download. Downloading the 1 minute data. Press OK. It's going to start to download. This went really, really fast because I've already downloaded the data and pretty much it was just getting caught up. But it's going to take, I'd say, about 5 to 10 minutes to completely download. And you're going to want to see the database look rather similar to this. So we're talking about almost 5 million records. So you want to make sure that you have a value that's close to 5 million records. And once it finishes, we're going to download again to where it says recalculate all time frames, and we're going to push yes. Push OK. There we are. Now once this has been done, we're going to go ahead and close. If you download and you see that this number is split, meaning that you see let's say 4 or 5 digits here and then a dash and then some more digits, what I recommend doing is closing and then trying to reopen and download again. And you should see the number as one number. The number shouldn't have any slashes at all. So if you're having issues with that, what you can do is close your MetaTrader and restart it. Sometimes that'll fix that issue. But right now we're good to go. We have our history. I'm going to go to Experts. And this is something that's very important. You want to make sure to deactivate your dashboard. You can run it with, let's say this is default, the red skin. If you leave it with the red skin, what will happen is when you download the data, or when you actually run the optimization, it'll take a long time because it's going to be reading the spread and making all these calculations, and that's going to slow the test down. So go ahead and deactivate it. We can leave the magic number and slippage as default. We're going to choose the mode. We're going to start with mode 2. And we're going to use a risk of 20%, which is default. Max lots, which is very important. Let's say a broker with IC Markets has a max lot size of 200. I'm going to use the value of 200 as well. That just means that if for whatever reason the EA is trying to place lot size larger than 200, it'll place 2 or 3 trades, and it'll kind of chop it up if it wants to place a trade that's over 200. And this is something that's extremely critical. It says block 0 hour. Normally, this will be on false. You're going to want to go ahead and set it to true. And let me explain why. Now, during the 0 hour, and this is really important. During the 0 hour, the spread for, like right now with IC markets, we're looking at a spread of 1.4, 1.6, 1.8. The spread can get even lower than that, but currently for this hour, it's usually under 2 pips. When 0 to 1 hour occurs, the spreads widen considerably. With IC markets, it's usually between 10 and 15 pips. With some brokers, it goes as high as 30 or 40 pips. That creates a problem because we're using a strategy that's scalping. And if I go ahead and put here that we're using a spread that's fixed at 2.5 pips and we're running through that 0 hour, what that's going to mean is that we're going to get very inaccurate results because there's usually the price jumps around a lot during the 0 hour. And if we're having a fixed spread of 2.5 pips during that 0 hour, it's going to tell us in the back test that many times we close for a profit during the 0 hour, when in actuality, because the spreads were so large, that didn't occur. So what's the workaround that we have? The workaround that we developed was this block hour. And what this happens when you set it to true is Lucky Dragon will be prevented from closing a trade during the 0 hour. So we're completely bypassing the hour where their spreads are larger than normal. Now, this is going to do one thing. It's going to prevent the EA from closing a trade when spreads aren't accurate, 1. And 2, there are times where there is spikes during the 0 hour, and regardless of the spread, the trades close for a profit. We're going to miss those, so it's going to skew the back test against Lucky Dragon slightly because we're not going to close any trades on the 0 hour, where I'd say on average we close maybe in a 1 or 2 week period, 1 or 2 days we'd close on the 0 hour. It's not all that common, but it happens. So this is something that I wanted to explain because the logic of why we're blocking Lucky Dragon from closing on the 0 hour is very important, especially since we're testing with a fixed spread. So I'm going to stop jabbering, and with IC markets, the spread is consistently under 2 pips. So I'm going to go ahead and put 2 pips. And we're running mode 2. So let's go ahead and start this. If it's running correctly, you're going to see using 1 minute data, and it's going to start charging and charging and charging. And it shouldn't say anything else besides using 1 minute data. Takes a little while, but once it loads up, you're going to see the test start. Now, one thing that's very important to note is that mode 2 is very spread dependent, meaning that if you're dealing with a broker that has an average spread of, I'd say, over 4 pips or so, it's probably not worth running mode 2. Mode 2 is a high performing mode, meaning that it can make a lot more profit, usually double the profit of mode 1. It trades a lot more frequently. But the other side, the flip side of that, is that mode 2 is also going to need a broker that has very good spreads. So that's why I recommend IC Markets, AxiTrader's a pretty good broker, TradeView as well. There's a lot of brokers that have decent spreads with the Great British Pound Canadian dollar. But you're going to want to take a look at this number and just make sure that it's a reasonable spread, and you're not going to be ending up with a spread that's 4, 5, 6, 7 pips with mode 2. Now it looks like we're finally getting this data to load. It's almost done. It's taking a little bit longer than normal because we're going from 2008 to 2020. Almost 15, or excuse me, my math is off. Normally what we do is we test from 2006 with every tick data, which I'll show you, and that's nearly 15 years of data. So we're dealing with almost 13 years of data here, and here we go. Let's go ahead and take a look. I'm going to click on graph, and I can see mode 2 trading. So as you can see, mode 2 does take stop losses, and a stop loss is basically when mode 2, its initial trade is from hour 22 to hour 0 is when it can place its initial trade. After that, it's possible for it to place recovery trades after the 0 hour. and it can only place 6 trades, and then it'll hit a stop loss. Now, how big is that stop loss? We're running a risk of 20%. So Lucky Dragon adjusts itself due to volatility. So you're not going to have a fixed amount of loss. But generally speaking, at 20% risk, I could expect maybe a loss of 3 to possibly 4%, depending on the volatility. As you can see, sometimes there's losses that are quite small, and other times you can see losses that are a little bit larger, and that really depends on volatility. So another factor that you're going to want to consider when running mode 2 is volatility. For example, right now the UK and the EU are negotiating on Brexit. There's some risk because of this, and that's creating abnormal amounts of volatility. Mode 2 is more susceptible to volatility, meaning that if there is a high probability that price action could shoot up in one direction or the other, we're going to want to either scale back the risk on mode 2 or not run mode 2 at all. Every system has its strengths and weaknesses, and with a system that's scalping, we want to make sure that we put it in a good position to win, and that's a position to where the market's not moving too much. If there's a chance the market could shoot up 200 pips in either direction, not a good condition for mode 2. But this backtest actually ran mode 2 without ever taking a break. And there was times where it had difficult periods. I mean, if you look at 2018, it had a difficult stretch, but it recovered. It had periods where it had some drawdown, but it recovers. Even this dip right here that happened this year, this is in March of 2020. There was a lot of volatility on the Great British Pound trading pairs in March. You'd have to be a little bit crazy to run mode 2 in March. But this backtest went through it. As you can see, it probably had 2 consecutive losses or so, and then it made up for it very quickly because when there is more volatility, usually the take profit is larger too, so it can make a little bit more gains. But it finished the test and it did pretty well. Let's see exactly how it did. Started with $10,000 and it finished the test with, what is this? It's a big number, almost $2 million profit. Of course, this is making no withdrawals. Profit factor of 1.7, which is not bad. Relative drawdown, 17.44%. So it stayed under the 20% limit that I put in. I said, with mode 2, when you select the risk, and I'm coming over here and I'm selecting and saying, hey, I want the risk to be at 20%, that means that based on a 15-year backtest, the maximum drawdown was under 20%. So that's what that means with mode 2. Let me think if I'm forgetting to say anything. We can see all the results here, all the way down to our $2 million profit. Not bad. Of course, that's compounding. When you compound things, if you compound something long enough, you can turn a penny into $1 billion in enough time. So keep that in mind. But generally speaking, mode 2 I consider to be a very robust strategy. It takes losses when it needs to. It doesn't hold on too long. If it runs into trouble, it'll just take a loss and move on and trade again the next day. So, but we want to use a little bit of discretion with mode 2. Now, mode 1, I'm going to run a shorter backtest just because it takes forever to run these longer backtests. I'm going to start in January of 2020. At least I think I am. Okay. December, January 1st. Now I'm going to change the mode to mode 1. And we're going to click OK. And go ahead and start this test. So the starting capital is 10,000. One thing I didn't mention is that in testing, I believe the default is 10,000. I believe it is. You can change it to any amount you want. I would recommend an amount that's not too large, just because the backtest will start spitting out errors because of it'll reach the maximum number of trades it can open if you put in too large of a number and run a really long backtest. So I'd recommend 10,000 or less for the starting capital if you're going to do a long backtest, but we're going to go ahead and run a mode 1 backtest. I'm going to push start. And I'm doing this because I want to show you the difference between mode 1 and mode 2, which is very important. Mode 1 ran, and if you notice, it didn't really have any losses. Why? Because mode 1 trades less often, and when it does place trades, it uses recovery trades in order not to get a balance hit. That means it can sustain higher amounts of floating drawdown, but in a backtest of 15 years with tick data, it's very rare for it to actually have a stop loss. And in this case, the stop loss would be 20%. The maximum floating drawdown was 13.85, which is a little bit high. But then again, this ran through that very volatile period in March, which makes sense to me. It did pretty well. It made $2,000. That means 20%. 20% in, let's say, today's almost October 1st. So in 10 months, it made 20%. Not too bad. Generally speaking, with mode 1, if you choose a risk of 20%, you can count on making about 20% per year. This year's been a little bit higher just because I think the volatility's been a little bit more. But that's basically the way that mode 1 works. So mode 1, you're going to see your balance grow and grow and grow, and it's going to look beautiful. But you will have stop losses. Like, I'm going to go ahead and try to trigger a stop loss on purpose. I'm going to go January 1st. And I think in 2008 things were a bit hairy for this pair. So I'm going to run it really quick with 2 pips spread. And it's, once again, it's blocking that 0 hour. Oh, flawless. And of course, it had a drawdown that was kind of high, 16%, when it's maxed out at 20%. That's rather high. But it makes sense because 2008 was a very volatile year. Now I'm going to go ahead and modify the spread. Let's try 5 pips. How do we do? Still made a good profit, and the drawdown wasn't any higher. Not bad. Now let's try 10 pips spread. That is horrific. If you're dealing with if you find a broker that has an average spread of 10 pips, please write this down in the comment. I would like to know who it is. I don't know of any. Still no stop losses, and it still actually makes a very decent profit. Drawdown still didn't even reach 20% at 10 pips spread. I'm going to force its hand. I'm going to put 20 pips spread because I want you to see what a stop loss looks like. And I'm going to add a few years here. Here, let's try this. At 20 pips spread, we should at least have 1 or 2 stop losses. I just want to show you what a stop loss looks like on mode 1 so you can understand. Come on, give me a stop loss here. Mode 1 is so resistant. Oh, phooey. It's not cooperating. 25 pips. This is getting insane. And I'm going to go ahead and do it from today, and we better get a stop loss. Otherwise, I'm going to have to crown this the king of market make. This is the worst nightmare for a market maker broker, because you can have horrific conditions and it still will not get a stop loss. I mean, that's it might sound like I'm overselling mode 1, but it really is a very robust and durable system, despite the fact that it uses recovery techniques to try to not have a balance loss. So it'll place up to 6 trades, and after the 6th trade, it basically has a hard stop loss, and it'll automatically close the trades that are open if it reaches a 20% drawdown. It'll automatically do it. So the most you can risk with mode 1 is what you set it up with. The chances of it actually triggering are quite low, as you can see with me going and torturing this poor thing with 25 pips spread in order to get a stop loss. So I'm going to let this data load, and hopefully we can get a stop loss with mode 1. Now I'll tell you, with mode 2, if I put the spread at 4 pips, you'll see it'll still be profitable, but it'll take away probably 80% of the profitability. Okay, please give us a stop loss, for goodness sakes, or I'm going to give up. It's going. I mean, this is crazy. There, finally. I've never been so happy to see a stop loss. So this stop loss happened in 2011, at the end of 2011. Another stop loss. Oh, it's getting beat up. So each one of these stop losses is 20%. So it had 20% hit here, another 20% there. And so because these two stop losses happened before it fully recovered, you're going to see that the drawdown is going to be higher. I'll let it complete. Maybe it'll get 3 stop losses at 25 pips. This is very abusive, by the way. This is very mean. I would never wish this on any scalper on the planet. A 25 pip. A 25 pip spread. Scalping. I mean, that is just to give you an idea, the expectancy of a good scalper would be positive, but usually positive just 2 or 3 pips or something like that. So being able to survive conditions of 20 pips or something like that as a scalper is just insane. So, okay, we finished. Boom. It should say 90% of you using MetaQuotes data. And of course, this is going to be negative. We started with $10,000, and lo and behold, we lost about 15% during the 13-year backtest. Relative drawdown was 55%. Why? Because when we had a stop loss, the price didn't recover until we had another stop loss. So if you run a backtest with mode 1 with any amount of reasonable spread, this would never happen. You'd have maybe 1 stop loss in the last 13 years, but the drawdown that's registered would be no more than 20%, because that's where the EA will automatically close all the trades. So, okay guys. Anyways, that is backtesting with mode 1 with abusive spreads. I just want to show you really quick what it looks like with mode 2 when we double the spreads, because I did do a backtest with 2 pip spread. I did not do a backtest with 4 pip spread. I'm going to leave everything the same. All I'm going to do is change this to mode 2. And I'm going to let it run. Now, like I said, mode 2, you need good spreads. Having a broker with 4 pip spread is really kind of borderline. If my broker had an average spread of 4 pips during normal market trading conditions, I would still consider using mode 2. I would just be very careful about volatility, meaning that if things are heating up with the Great British Pound, or oil for that matter, because the Canadian dollar is affected quite a bit by the price of oil. So if you're having major news regarding oil, or major news regarding the UK, take that into consideration and turn mode 2 off, especially if you have a large spread. Okay, we're very close to seeing this backtest with MetaQuotes data, 1 minute data, going all the way back from 2018 until today. And we're blocking the EA from even closing trades on the 0 hour. So if someone says, oh, you have to take in consideration the bad spreads that exist during the 0 hour, guess what? This not only takes it into consideration, it completely removes it from the equation by not letting the EA even close a trade on the 0 hour. So, and when you're choosing a spread, you should go and say, okay, what's the average spread for my broker? Plug that in. You know that the spread's going to widen during that 0 hour. Not a big deal, because we're not even going to let the EA close a trade during that hour to take advantage of that on the backtest. And once it goes to the 1 hour and spreads start to normalize, as soon as it gets to 1 hour, you'll see the spreads start to drop. And usually within 15-20 minutes, the spreads will be pretty reasonable again. And so, let's see where we're at. The system still makes money. I mean, there's a huge flat period here. Look at this. From 2012 until about 2015, this EA was more or less break even. Lucky Dragon was break even during this period with a 4 pip spread, running it regardless of what's happening in the markets. If you're trading with a 2 pip spread, you're not going to see this flat period. It's going to look something more like this, where it's taking losses, but overall it's making headway. And really, the EA really starts taking off in 2015. That's where it really starts to make pretty good profit. Now, I'm going to let this backtest complete because I want to be able to see if the drawdown stayed under 20% with 4 pips spread. It's probably going to be really close to 20%. It might be a little bit above 20%. And we're finished. So let's look at the report. 17.62. So still, even with high spreads, we maintained under 20% drawdown, which is great. And it still made a decent profit. I mean, we went from 10,000 to $500,000 with a 1.49 profit factor. That's not bad at all with 4 pip spread. But you notice when it was 2 pip spread, we didn't do $500,000. I believe we did $2 million. So it was 4 times better net profit with a 2 pip spread versus a 4 pip spread. So take that into consideration. Anyways, this video is extremely long. I was planning on actually showing tick backtests as well, but I'm going to go ahead and save that for another video. If you have any questions for us, go ahead and write us at support@luckydragon.ai, and we'll be happy to answer any questions, or you can reach out to our Telegram. We try to be as available as possible, me and Fernando. But anyways, thank you so much for watching this entire video. Go ahead and leave a thumbs up and subscribe to make sure you get all the updates. Anyways, guys, take care. Robert is out.